Welcome to Business Incorporated on Channels Television. I'm Ini John Mekwa. Well, let's dive right into the program, beginning with market numbers on the African continent. The trading on the floor of the Nigeria Exchange Group was already in the negative notes at intraday. The all-share index, following previous sessions, shed 0.4%. South Africa's JSE followed suit. It was down 0.02%. However, the EGX 30 of Egypt came with a lot of sunshine, adding over 1.3% already at intraday. Hopefully, it will end on a bullish note like Kenya did yesterday. The all-share index added 0.19% at the close of trading on Monday. And in the Middle East, markets were all in the green at intraday. Abu Dhabi had the highest increase, 0.53%, followed by Saudi Arabia, far behind though, with a 0.37% increase, setting the pace for Dubai and Qatar, all adding over 0.3% each at intraday. And in Europe, stocks were mixed this morning, searching for direction after Wall Street arrested a slide triggered by a hawkish turn from the Federal Reserve. Well, what else is happening on the business scene in Europe? Conrad brings us up to speed from Frankfurt. Hello, Conrad. Good afternoon.
Good afternoon, Annie. Thanks for having me back on Channels TV. Hi to everyone in Nigeria.
Hi to you too. Well, in Europe, the distribution of billions of euros of the EU's COVID recovery fund has started. And in light of this, Italy's Prime Minister and the German Vice Chancellor had a discussion. Can you give us some insight into that discussion?
Yes, it was reported that at their meeting in Berlin, Angela Merkel and Mario Draghi talked a lot about football and, of course, about the fate of the Italian and the German football teams who are currently taking part in the Euro Championship. But, of course, the more important topic in terms of politics and economics was, as you said, the COVID-19 recovery fund, where now the money is started to be spent and distributed to the different Euro and European Union countries. Merkel and Draghi also discussed how important it is to combine the spending of the money from this fund with reforms in Italy of, how the labor market is administered and how social benefits are being distributed. Meanwhile, the markets anticipate that Draghi will stay in his post at least for 2 more years. That's reflected in very favorable Italian government bond yields right now, who are very stable, following reports that in Rome, the political parties backing Mario Draghi have no intention and also no benefit in, getting rid of Draghi early. The outlook for the Italian economy at the moment is too favorable.
Well, Wirecard, the name that stands for the biggest financial scandal in the history of Germany, an investigative committee was installed in the German parliament to put light on what was going on, and this committee delivered its reports. What are some of the important conclusions from that report?
Well, I think, first of all, it's important to note that there was not simply one conclusion drawn. Today in Berlin, we had 6 separate press conferences happening by the political parties of the German parliament, who all took part in this investigative committee. So not only has the whole process been very politicized, but also it looks like there were very different conclusions drawn by the different political parties from this investigative committee. One of the things that the committee could agree on was that in the case of Wirecard, there was really systemic failure in the financial oversight. So, as a consequence, a few members of German supervising authorities had to leave their post, including the chief of BaFin, which is the major supervisor for financial services here in Germany. Also, the investigative committee came out with the conclusion that obviously the German chancellor was too naive when she still lobbied very hard for Wirecard, for example, at a meeting with the Chinese president. And this long after the Financial Times, the renowned newspaper, had started to report that something must be wrong with the balance sheet at Wirecard.
Well, two more IPOs are in the pipeline at the German Stock Exchange. How's the pre-IPO process going?
Well, Mr. Specs and Bike24 are the names of the companies. That indicates, first of all, the ambitions of both companies, having English names but being German companies. It looks like those companies really want to become players in the international online retail sector. Well, in terms of how it goes, Bike24, the IPO is scheduled to happen here this Friday. The pre-IPO phase has been going so-so, I would say. The shares were distributed or are going to be distributed at the lower price range that was originally targeted. In the case of the online optician Mr. Specs, it remains to be seen how the book building goes. The price range pre-IPO is 23 to 27 euros, which is not a very broad price range. But, given that Mr. Specs has struck cornerstone agreements with the Italian eyewear maker Luxottica and with several investment funds, many traders here are convinced that this price range is wisely chosen. Tomorrow is the first day when investors can announce that they're interested in buying the shares of Mr. Specs, and the IPO then is scheduled to happen Wednesday next week.
Well, wish them all the best as they come on board from tomorrow. Well, thank you so much, Conrad, for bringing us up to date on what's happening in your region, and enjoy the rest of the day. So we move over now to London, where Juliana is waiting to also bring us up to date on what's happening in the UK. Hello, Juliana. Good afternoon.
Good afternoon, Innie.
Well, VAT, income tax and fuel duty receipts are up, but alcohol duty has gone down. It seems it's a data-full day for you today, Juliana.
Well, yeah, this is all about the Office for National Statistics releasing data about UK government borrowing, a very big topic here, because a lot of people have been benefiting from the handouts, but of course we've got to pay that back sometime soon. The results today show that in the month of May, UK government borrowing was at £24 billion. This is still £19 billion that it was this time last year, although it's still a lot of money. Got a couple of figures here. So tax receipts came in at £56.9 billion. This is the most that they've seen as the economy starts opening up. People are no longer on furlough. A lot of people have been paying their tax. So that was very good. But government spending was still at £81.8 billion. So the difference is the result that the Office for Budget Responsibility has put out. Still much lower than what was expected. So Rishi Sunak, the Chancellor, has been smiling a lot today. Some economists within the city have been saying, right, does this mean that we don't have to have a massive hike in corporation tax over the next couple of years? But that is unlikely to be the case, because we know the furlough scheme is going to be wound down. As the furlough scheme is winding down, yes, on the one hand, the government will be spending less money topping up people's wages, but we are expecting to see at least 1 million jobs go during the month of September. With those jobs gone, consumer confidence is low, people are not spending, so those VAT receipts won't be coming back in.
And restaurants have had to cancel daytime lunch service. These days are not very good for the hospitality sector.
No, although it's got to say it's a unique story, and it's a story that really is only affecting Michelin-star restaurants. So if that's your fancy, Innie, then that would be a problem for you, though they are very expensive to eat out on. There's one story that's been doing the rounds today about a restaurant called Pied de Terre, very nice restaurant. I've been there a couple of times myself. It's just around the corner from this office. The owner, David Moore, is actually celebrating 30 years of that restaurant, but he's announced that he's no longer going to be able to do lunchtime service, and that's because there's a shortage of very good chefs in the country. He believes it's all down to Brexit. This has been an ongoing discussion in the hospitality sector. In fact, yesterday, even when McDonald's announced that they'll be hiring 20,000 more staff, they did say that the recruitment process has become difficult. I think a lot of Londoners may have taken for granted just how many Europeans have struggled during the whole Brexit saga and have decided to work back home. He gave an example of putting out an ad before Brexit for a chef position. 800 responses. He put out the same ad 2 weeks ago. He only got about 25 responses. And of course, of that 25, he said it's just really, really difficult. He isn't the only one. Michel Leroux Jr. has also had the same fate, trying to get some decent chefs to cook up a pretty decent meal in his kitchen. So it is an ongoing discussion, and something I think is probably going to land on the doorstep of Prime Minister Boris Johnson. He got Brexit done, but, you know, there's fallout that comes off the back of that.
Yeah, a lot of fallout from Brexit. And Federal Reserve Chair Jerome Powell renews forecast for inflation subsiding. Are investors in the UK holding their breath for his testimony at the House subcommittee? How are they reacting to this?
Well, absolutely. I think even investors in Nigeria, everyone's waiting to hear what Jerome Powell's got to say. He'll be speaking to Congress, I believe, at about 1800 G, so in a few hours. We've had a little taster of what he's going to say, because it was obviously, it's going to be a prepared speech, though he will be grilled, I'm sure, by lawmakers about his sudden hawkish tone. I do have a little bit of his prepared statement, which I can read out here. So his stance is that this inflation rise is transitory, and I think the transitory is the key term. He says, as these transitory supply effects abate, inflation is expected to drop back toward our longer run goal. The pandemic continues to pose risks to the economic outlook. Even with the vaccination, vaccination is waning, and we are starting to see different COVID variants. So on the one hand, yes, he is a little bit hawkish, but the rise in inflation isn't something to be worried about over the long term. And I think it was when those minutes were released yesterday, you saw the lift in the global markets. Nikkei, that fell about 4% yesterday. Today it's up by about 2.7%. The FTSE is also in positive territory, and it does remain that way at intraday. The FTSE all-share is up 0.26%. The FTSE 100 is up by 0.21%, and the FTSE 250 is up by 0.47%. In the currencies market, the British pound is down on the US dollar by 0.34%, down on the euro by 0.17%, and down on the Japanese yen by 0.20%.
All right, Juliana, thank you so much for bringing us up to speed from the UK, and enjoy the rest of your day. You're welcome back. You're still watching Business Incorporated on Channels Television. Over to the commodities market. Now, crude oil prices have receded after Brent hit $75 a barrel for the first time since April 2019, as investors remain bullish after a quick recovery in global oil demand and as concerns eased over an early return of Iranian crude. Brent futures for August climbed 26 cents, which is 0.4% to $75.16 a barrel, pairing earlier losses. U.S. West Texas Intermediate crude for July was at $73.70 a barrel, up 0.1%. WTI for August climbed 0.2% to $73.23 a barrel. BOFA Global Research raised its Brent crude price forecast for this year and next, saying that tighter oil supply and recovering demand could push oil briefly to $100 per barrel in 2022. Well, what does this mean to the Nigerian economy? Lawrence Messi, research analyst with Financial Derivatives, bears his mind on this on the show this afternoon. Hello, Lawrence. Good afternoon.
Hello, good afternoon.
Well, this morning, Brent crossed $75 a barrel. Well, it has now tapered, but it's still on the rise. We understand that reopening of economies is driving this high. But how long do you see this, still going on the rise?
Thank you for having me, and thank you for that question. We believe that the price is going to remain high significantly into maybe the first quarter of next year, especially as fiscal packages are being rolled out across the world economy. So until these fiscal programs and policies are reduced in order to focus more on inflation control, then we can expect that there would be lower demand for oil, which might also cause the oil prices to stop their rally. However, the main cause for the constant high prices and increasing prices of global oil products is largely due to supply tightness being imposed by the Organization of Petroleum Exporting Countries. As we've seen, OPEC Plus, these are non-OPEC allies, have contracted supply by 8 million barrels per day, which accounts for 8% of global oil supply. And OPEC itself still maintains its cuts at above 5.5 million barrels per day. In total, this is about 13.5 million barrels per day in supply cuts, which is largely significant when talking about price mechanics in the global oil market.
So the benchmark price rule suggests that any revenue accruing to the prices above the benchmark should automatically go to the excess crude account. And the excess price is $35 per barrel above the $40 benchmark. Yet, in our excess crude, we have just about $700 million. What's, from your perspective, is hindering, this following this rule that is supposed to be?
The excess crude account is meant to be credited with revenue from excess in oil prices. So this revenue is actually determined by both the oil price and the production. So in the 2021 budget, oil production is pegged or is expected to be 1.8 million barrels per day. But in actuality, it's currently about 1.3 million barrels. So despite the fact that oil prices have risen from the benchmark $40 to $75, the oil production levels are still a bit low. And so the total revenue, there is still a shortfall in revenue, so which means we haven't even attained the main target for all revenues. And as such, there's actually no excess revenue to be deposited in the excess crude account. So there's actually been a lot of focus mainly on just the price, but not on the production itself of oil. And that's actually why the excess crude account has remained a bit stagnant at 72 million across the year. However, it's also noteworthy to state that across 6 years, between now and 2015, there's been a significant decline in the excess crude account from about $2.2 billion to what it is now, $72 million. This is highly attributable to also the same thing. Oil prices have fallen over the years. I think in the 2015 recession, when oil prices went to about $30 per barrel, and as such, we've not been able to meet our revenue targets based on the budgets. And also looking at election periods where there is some sort of fiscal laxity and increased withdrawals from the excess crude accounts, as well as in 2018, the refurnishing of the Paris Club loan. So these are things that account for the depletion of the ECA and its continued stagnant state over time.
All right, Lawrence. Well, the Iran nuclear deal was stalled. The talk was stalled over the weekend, but most likely it should be renewed maybe by next quarter. How much extra oil is Iran likely to supply to the market?
On the Iran nuclear deal, with Donald Trump withdrawing about 2 years ago and reimposing his sanctions on Iran, that left Iran economically damaged, basically because they have sanctions on their oil exports. But the repercussions of this deal happening would mean that Iran would be able to pump in about 4 million barrels per day into the global oil market. So this is actually a supply shock. And what we expect this to cause is a downward trend on prices because there's increased supply into the oil market. And the repercussions this would have for the Nigerian economy would simply be reduction in revenues and also reduction in the amount of inflow into our external reserves as well.
All right, Lawrence, thank you so much for sharing your thoughts with us on the oil price in the global world and how it's affecting Nigeria's revenue. Do enjoy the rest of your day. Well, moving on now, the world's top cocoa growers are insisting that the $100 billion chocolate industry pays a premium put in place to boost the livelihood of West African farmers despite a drop in consumption. Ivory Coast and neighboring Ghana, which account for nearly 70% of global cocoa production, say chocolatiers favor profit over farmers. Last year, the group had secured a pay raise for farmers by charging companies a premium of $400 per ton, starting from the beginning of the current farming season, months after new price rules kicked in, West African regulators have accused some companies of backtracking on that commitment. And the African Development Bank has said that $430 million highway project linking Enugu State to Bamida in Cameroon will be completed this year. The bank says that it was part of its investment in West Africa, which currently stands at $16 billion. According to the president, Dr. Akinwumi Adesina, the $430 million highway project will transform trade opportunities between the two countries. And Glencore PLC could reopen its Mutanda mining copper and cobalt project in Democratic Republic of Congo by the end of 2021. That's about 2 years after idling the mine. Congo's new mines minister met with representatives from the Swiss company yesterday to discuss the restart of the mine, which closed in November 2019. A reopening of Mutanda, one of the world's biggest cobalt, comes when there's renewed demand for battery metals as automakers focus on metal-intensive electric vehicles and global economies shift away from fossil fuels in favor of cleaner technologies. And that's it for the program today. Thank you so much for watching Business Incorporated. I'm Ini John Mekwa.